Welcome to today's executive briefing. The topic is where's the risk, qualifying and valuing ICO opportunities. Hello and welcome. My name is Peter Guy. I am the co-founder and editor-at-large of Regulation Asia, and we're very happy to discuss this topic today. We have all seen and heard the sensational headlines about initial coin offerings, or ICOs. But what exactly are these events? Will they disrupt venture capital as a means to funding development? Are they a sign of an economic or financial bubble? Or is there something genuinely worth considering underneath the surface and the noise? Given the potential for ICO startups, G20 countries and the world by extension are starting to give the industry much needed legitimacy. More and more governments are working together with startups to tap into the benefits of ICOs. As the industry gains more recognition, institutional investors will continue to play a more prominent role in funding ICO startups and the tokenization of companies. A prime example of this crossover was the ICO of Telegram. While Telegram's ICO has already raised more than $850 million, most of the funds came from institutional investors. And the landscape continues to change even recently. A Morgan Stanley report for this month showed that from the last quarter of 2017 to date, ICOs were dominated by financial firms, VCs, private equity, and banks. And during the same period, trades have been dominated by the yuan. So does this significantly change due diligence, risk management, the perception of risk, and how to go about assessing these new types of instruments? Should they be called securities? And if they're not, what are they? And what tools and metrics should we use to study their legality and their financial and investment worthiness? So joining us in today's discussion is our expert panel. David Liu, Managing Director and Head of Compliance for Asia Pacific and Hong Kong Office Head for Kroll. Jay Chin, a digital business lawyer with OC Clarke. And I'd like to also welcome our final expert to the panel, Brad Maclean, co-founder and frequent contributor to Regulation Asia and the current Chief Operating Officer of Gatecoin, the first exchange to list Ethereum, ERC-20, and to provide direct participation in ICOs in Hong Kong. Welcome, guys.
Thank you.
Thank you. Thank you very much.
I guess to begin the discussions, I'd like to invite Jay to provide us with a quick walkthrough of the regulatory frameworks covering ICOs. Jay, from your perspective, how many countries' regulators have issued statements for or against IPOs, and how do you see the regulatory framework developing around it?
Sure. Thanks, Peter. So I think for globally, most major jurisdictions, most regulators across the globe have issued an opinion and view on ICOs and cryptocurrencies in general. Certainly all the major jurisdictions, major economies of the world, the regulators in those jurisdictions have definitely given a view as to what an ICO, what kind of regulatory regime an ICO or a cryptocurrency should fall under. Most of these, the key question for most of them would be whether or not the underlying crypto token in an ICO is a form of security, and whether that question is different for each jurisdiction. The jurisdictions share commonalities. What defines a security? But there's intricacies for each, and certainly for Hong Kong, the key question, if it is deemed a security, so if it falls under the definition of security under the Securities and Futures Ordinance, then it would be subject to regulation. The simple question, if it's not, then it won't be, it won't be subject to any kind of major regulations, or certainly it won't be falling under the securities regime in Hong Kong. In terms of the attitudes of the regulators, I would say that, probably about 2 years ago, the regulators across the globe were more or less dismissive of, of what a cryptocurrency is, a crypto token is. And that kind of moved to a befuddlement, what is this thing? Why are people interested? To kind of a current situation. Each regulator is a bit different, but uniformly, I would say the attitude is kind of, they're still confused. They have no idea how to regulate it. They're still trying to make a sensible approach to a sensible regulatory regime to it. But they are very much scrutinizing, whether it's ICOs or crypto tokens. It very much has the focus of the regulators. And now, as we move forward, I would expect that more and more regulations come into play, and the regulators take, hopefully, a sensible approach to not just creating the regulators take a sensible approach to create a new regulatory regime for ICOs and not just impose, the IPO or current securities regime onto crypto tokens and ICOs in general.
Thanks, Jay. Do you think that with this kind of uncertain framework and initial framework, there'll be many enforcement cases brought about? Because ultimately, the common law will only be built up if cases come to court.
Yeah, absolutely. I think so. I think there's two kinds of questions we have there. So the first one being whether the regulators will have any kind of enforcement action, and the answer very simply is absolutely. The U.S. regulators have already issued a number of enforcement actions, and importantly for Hong Kong, this year has seen for the first time ever that SFC has not only issued warnings to exchanges, to issuers, but also has taken enforcement action. And particularly of note, I think it should be around February or March, the enforcement action against Black Cell Technologies, which was an ICO at the time, and which was deemed an ICO of a securities token by the Hong Kong regulator. And the issuer was forced to shut down the ICO, and not only just shut down the ICO, but also return all the proceeds from the ICO. So as we move forward, I would definitely say that not only just in Hong Kong, but across all jurisdictions, there will definitely be more enforcement actions and warnings as the regulators increase their scrutiny.
Hi, I guess if we just go to the slide there for a second, one of the key things we do as an exchange is we keep tracking the regulations around the world and talking to fancy lawyers from everywhere to kind of get their thoughts and perspectives on what we can't and shouldn't be doing in different jurisdictions. We notice there's really this kind of fragmentation across the world, and we're seeing definitely from at least the exchange standpoint and an ICO standpoint, really different attitudes emerging out of this. So if you see the red reflects bans because everyone's really aware of what's happening in China and things like that at the moment. There's been a massive crackdown on that. Dark gray represents highly regulated. Yellow, active discussions around and warnings around what's happening in the crypto markets. And then we're seeing green that's more of an active support. And you definitely see in terms of the developments around exchanges and ICOs, a movement of firms into these different jurisdictions based on the current regulatory formats, or at least the proposed regulatory formats.
Do you think, Jay, that using the IPO legal structure, at least loosely, is a pathway to investigating an ICO and determining whether it makes both legal and investment sense?
I think fundamentally we need to look at in which jurisdiction it is. So, for example, in the U.S. context, their securities laws are quite broad. So that would make sense for them in the sense that in the U.S., anything that has a potential return on investment, right, is deemed a form of security. Whereas in Hong Kong, we have very strict definitions of security. So in Hong Kong, and similar in Singapore, you don't want to go down the IPO road. They're completely separate things. If a token is deemed to be a security, you need to go down and let's say you go down the IPO route. Once you have that token in Hong Kong, the question is, in Hong Kong, there can only be one securities exchange, and that's the securities exchange. That's the stock exchange of Hong Kong, right? So if you go down the IPO route, you have a security token, you go down the IPO, you want to comply, you want to follow the laws, you go down the IPO regime. At the end, you have a token that can't be listed on any exchange, on any crypto exchange in Hong Kong, unless there's a fundamental shift in the laws.
Perhaps we can bring David into this. Maybe one way to look at it is, what do you think are the basic initial steps of compliance that you can take for examining an ICO?
Sure, I'd love to. Thank you very much. Actually, and also this echo what Jay and Brad had mentioned about regulation. What we've seen as well, I'll just touch upon it briefly too, is that indeed all the regulators are paying very close attention. And similar to what Brad mentioned about seeing different jurisdictions, some have very clear jurisdictions like China banning or Japan allowing. We're starting to see a lot more countries and their regulators giving warnings like Hong Kong, as Jay mentioned, but also setting up special regions. For example, I'll just mention the Philippines. In Philippines, they have, I'm trying to think of the name, Cagayan Special Economic Zone, where they encourage crypto-related and blockchain-related businesses to set up in this special region. And they'll co-invest. They're encouraging companies to start there. So in a sense, they're signaling that they are interested as well. But then they're also giving guidelines where any exchanges of cryptocurrency, the fiat and vice versa, needs to be done outside of the Philippine jurisdiction. So you'll start to see, all the regulators in different countries move in a direction where they are not just scrutinizing, but also testing. I think testing the market, testing the waters to an extent, because I think it's a positive trend. And in that sense, going to compliance, we're seeing that same pattern. Initially, when ICOs launch, there were no. It was more of an innovation, right? There is no regulation. There still isn't, but people, were first to marketing it. It's about driving innovation. And as with innovation, it evolves eventually. The institutions, the regulators, the governments, it will all evolve. What we're seeing is that evolvement. We're seeing ICOs start doing in the past, it was a voluntary doing KYC. Now, I think everybody's, including exchanges, are doing KYC, AML, putting compliance structures and processes into place. Not all, but we're seeing that trend. I'll use an example. There was an ICO recently, and this is further to talk about trends. In the beginning, innovation, entrepreneurs. As this evolved, now we're seeing a trend of, let's call it cryptocurrency or ICO investment banks. One example is Polymath. They are a crypto investment bank. They raised a successful ICO, but they did it in a way it wasn't open to the public. It was done via airdrop. So that's where it could be called a marketing approach as well. You give free tokens, and that drives interest, and then people learn about your product and services and would buy into the ICO. They've successfully raised over $50 million on a not public ICO. But what they did was they've done their KYC process on all investors, and that is quite a feat. But we're starting to see that trend as well. There's still a lot of room for all the ICOs in this market, but we're seeing that trend of moving into, if you want to be taken seriously by institutions, if you want to fundamentally create businesses, they are moving towards being compliant and putting it into place, even if there is no regulation yet. That's a trend we're seeing.
Right, and when you see VCs and other regulated financial institutions, even such as Goldman Sachs, announcing that they're opening some sort of trading vehicle.
First trader.
Yeah. When you see that, do you envision spreads narrowing, a formalization of compliance, and improvements over the investability of this asset class?
I do think so, and it's something that's still to be played out in the markets. It takes time. All the institutions are exploring. They are looking at it. What they're looking at it is they're looking at it in the same lens they would as any of their other service and products. So in a sense, it'll be going in parallel. Regulators exploring, scrutinizing, putting in place best practices. Same with the institutions. They're interested, exploring, putting into best practices, and testing the waters. So yes, we definitely see that trend.
So I guess just following on from that point, from a compliance perspective, and one of the reasons you're seeing KYC AML being at the forefront of most of these projects is because, historically, people were really happy with crypto, Bitcoin, Ether. But the reality is the markets have evolved and everyone's needing that fiat component. And that's where the regulatory focus is right now, is on that fiat component. And if you want to have a bank account, you need to be compliant with these rules. So there might not be any regulation, but if you're not doing the KYC AML, you're potentially allowing money launderers through or terrorists through. And that means your bank account's going to break. And then you're stuck with a whole lot of crypto or fiat on an exchange that you can't actually realize the value to achieve your goals as a business or to recognize that revenue.
Indeed. No, I agree 100%, Brad. And just to add to that too, I know I'm probably in one of the minority views. So, a lot of people who love the ICO, the blockchain, they want to see a free market. They don't want any regulation because they want it to grow and innovate. But as you just mentioned, Brad, as you evolve, it needs to evolve. But also, we forget the fundamental basic of why we should do this. It's not just because of regulatory focus or scrutiny. It's also to protect the investor. That's one of the key things of doing KYC. What we've seen is a lot of fraudulent ICOs. It could be anything, and especially you take different industries, it all blends together. For example, not just money laundering or terrorist financing, but for investors' perspective, there's a lot of credit card fraud, identity theft. We see that very predominantly, normally, even without ICOs. So when you have an ICO, a lot of times you'll learn what's happened is successful ICOs who have raised money. A lot of that is from credit card fraud, fake credit cards. You start seeing, you think you've raised a good amount of money, then you see a chunk of it starting getting chargebacks from the credit card agencies. Then when you look into it further, it turns out it's been stolen cards. That is one of the most rampant ones, I think. So it's protecting investors. It's protecting the ICO project itself. Overall, it benefits both, the whole community. So that's an important factor, I always think, that why KYC, it's a deterrent. It's not going to catch everybody. It's not going to stop everything, but it is a big deterrent.
Yeah, and I mean, David, you're definitely not in the minority. I wholeheartedly agree with you that regulation is maybe just from a lawyer. Just
the lawyers have to talk about compliance and regulation. I'm surprised.
Surprisingly. But I do think, as I always say, that regulation for ICOs for cryptocurrency markets, it's not a bad thing. It gives certainty on top of what you've mentioned already, David. I would say another good point is that regulations give certainty, right? It tells you, what is permissible and what is not. Whereas now I think there's a lot of vagueness and grayness in the market, in the regulation, and no one's really sure, right? And everyone's kind of just fiddling along, feeling a way through.
Sure. Perhaps we could look at what a few of the basics at examining ICOs. We wrote in an analysis last week about what are the basic things investors should be looking at, and I think just to quickly go through it, the first one would be to maintain a business-like attitude first about ICOs, and to look at it just as if it's any type of investment. getting caught up in the fanfare and the wild returns. So one of the things to look at that you'd look at for any investment, certainly based on my private equity experience, is it a real business? And since all of this is done online, the people sponsoring it should have an extensive white paper or memorandum on what their business is. Two, careful of fake LinkedIn accounts. There've been a number of ICO scams based on founders who have completely faked profiles on social media. So without a regulated requirement for transparency, like a prospectus, and without an organized market of analysts, as in the equity markets, you really have to press the sponsors and the founders of the ICO very hard to prove that they have a real business and why they want to raise the money. And I guess really the last thing is to really check on, do they have skin in the game? And that really means once they get the once they get your money, will they be selling out quickly? Are they locked into this investment for the long term? That makes it a real business, not just a platform for spewing out tokens in exchange for money that gets funneled away. So those are some of the key basics I think that you should maintain and not skimp over and not overlook when you're looking at ICOs.
I don't know. I'm sure Jay has a different opinion, but I think it goes well beyond that, to be honest. I mean, yes, a lock-in period is not common with the process, and I think that that's an area that needs to develop. But if I'm looking at a project, I'm looking far beyond the white paper because, to be honest, that's all hype, and that's what the valuation is based on today. I'm looking at their valuation techniques, multiples, comps, discounted cash flows versus just using pump and dump schemes or caps, for example, to really incentivize people to take or speculate on it. I'm also looking at the governance and control frameworks that we have in place. I'm looking at the underlying team and the experience of the team. But I'm also looking at the technology. In the white paper, they're going to disclose the underlying code. And we've noticed, time and time again, that the code disclosed in the white paper and the actual code of the smart contract, there's a disparity. In fact, we had one case where the white paper had 18 lines and the smart contract was 489 lines, which really was the underlying mechanism of how all this money was going to be distributed. So I think that we need to go far beyond that. But we also need to look at tax and accounting. So it's great to have all of these legal opinions to say, look, this isn't a security, but in the reality, for me at least, you look at milestones and how revenue is going to be released over time. Because you pay tax on revenue, you don't pay it on, I think, on shareholder loans or on equity kind of into the business. So for us, we're looking more and more over time, saying, have you paid your income tax on that revenue that you got through your utility token? What do you think, Jay?
I agree. I mean, when you're deciding whether to buy into an ICO and cryptocurrency, it's kind of, it's very similar to whether you decide to invest in an early venture startup, because essentially that's what you're doing, right? So you're going through the business plan, you're trying to assess whether the underlying business, is it viable? And that viability can be assessed by, are the team members, are the founders good? Do they have the right experience? Do they have the right planning in terms of not just getting the legal advice, but as Brad mentioned, but getting tax advice, financial planning going forward. So I think all these things come into play, and also I think for most of it, there's also needs to be a common sense approach. Does it pass the smell test? If you're having a company that's setting up in a very dodgy Eastern European jurisdiction that says they're going to, change the world doing all these things, does that make sense to you, right? And usually, I think if the answer is no, then it's probably, if it's too good to be true, it probably is.
So, David, what kind of compliance red flags have you noticed recently in this area?
When we do, because we look at it in two ways. We help companies set up compliance processes and controls, but we also help large institutions look at it because they have an interest in the market. But one thing we do see underlying that is the same from both sides is, and I think Jay touched upon this briefly, but we do see a lot of fraudulent ICOs. A lot of ICOs that we're looking at and we're doing due diligence on, the founders are, fake. Their identity, their pictures are taken from social media. The individuals whose identity has been stolen would not even know about it because, until their friends tell them, hey, how come you're telling me to buy this token? Because their social media has been hacked. Identity theft, as I mentioned earlier, and also Wall Street Journal put out an article last month where they had investigated, I think, over 1,400 ICOs, and they found that 1 in 5 had red flags or had potentially fraudulent, and they found, I think, 200 or so fake identities. And I think Wall Street Journal even set up a token ICO sale and successfully did, raise money on that as well. Well, we know that's easy, that's been done before by people just doing it as for fun. But so one thing we do see is the identity. It's but more importantly, this is just on, basic ones. There's more compliance risks when you think about it, is looking at the investors who's investing in an ICO. You want to make sure there's no money laundering, because you don't want to have had a successful ICO sale and then find out some of your investors are politically exposed persons. Some may have been tied to money laundering, and this has all been seen in this market. So those are the more serious issues of trying to put a good control and process in place. And institutions, they are looking at it with the same scrutiny as their regular services products, and they are applying the same lens. So they want to make sure there is no adverse information that could be reputationally damaging for them.
In kind of line with that compliance, looking on the other side, which is what are your legal remedies and recourses in the event of a failed ICO or an ICO that you believe is fraudulent? Since regulators, there's not a lot of regulation in this area, is common law, that is fraud, the only recourse you have, and how would one work towards a remedy and enforcement?
Sure. So I think the best way to approach this would be to look at it from a non-US perspective. So for at least for Asia, so for the common law jurisdiction, Singapore and Hong Kong being the primary marketplace for ICO. The rough answer is that there's actually not a lot of recourse for an investor if something goes wrong in an ICO. An ICO in Singapore and Hong Kong, the token itself would be treated as a virtual commodity. So no different from selling a pen, or a book, or any kind of product. So along with that, the terms and conditions of that sale, which is something that not everyone reads when they go through the ICO process, purchasing process. The white paper is fine, but the white paper doesn't govern that transaction. Usually, in an ICO, when you're buying it online, there's terms and conditions, just like any website, and that would be the basis of any claim and remedy that you have. So it's important to read that through and understand. Most of the time, even if you read it through, as a purchaser, you're not going to have many rights, unfortunately. But at least it gives you an idea of what it is. Until there's litigation and where some of the matter is settled by the courts or decided by the courts or given more clarity, unfortunately, this is what we're left with. I mean, ICOs themselves, cryptocurrency, are high-risk products.
I guess on the flip side, and I know you mentioned that you're going to exclude the US, but in the US, we are seeing a lot of litigation and class action lawsuits against ICOs. Absolutely. And I mean, what are your expectations around that? I mean, given it seems basically it's a security at the moment.
Yeah, I mean, that's why I say excluding the US. US is different because it's under their securities regime, and US laws are different, unique to the rest of the world. I think it's a much more litigious society. So
Sorry, just to ask, in the U.S., an ICO is considered an offer for sale, is considered a sale of securities, as opposed to other jurisdictions.
Correct.
So it's Ethereum, right?
Correct.
Yeah.
Or Ethereum, I think it's recently deemed
security.
Yeah. So it's it's just completely different regimes that govern it. So it's difficult to say one way.
From what you've seen of fundraisings, which is a proxy of activity, liquidity, interest in the market, do you feel investors are becoming more sophisticated in their look of ICOs, or that institutions are actually able to make their way through it from a legal standpoint?
I would say for us, to be honest, we don't see a lot of institutional investors going into ICOs, at least from the projects that we've seen.
From what I've seen, sorry, just to interject, that would be a lot of high net worth people, family offices.
Yes.
Right, that's what I call institution. That's what, in the broad sense of institutional. I mean, if you wanted to be specific on regulated financial institutions, I have not seen many go into ICOs in a large way yet, although you hear, as I said, Fidelity, Goldman are looking at some way of participating in it, whether as a bank or whether as a trader. But they have yet to formalize or formally announce actually any kind of function in it, so I'm not sure how they're going to do it. But as a regulated financial institution, I think it's difficult, but there are a lot of family offices who have size and interest and breadth too, and also since they're unregulated, they can do anything they want.
Yeah, no, absolutely. For not just ICOs, I would say on the whole, in terms of cryptocurrency transactions, we are seeing a lot more professionalization. So there's a lot more say funds, not the big banks, but other financial investment firms that are more and more, with increasing more and more sophistication, getting involved in cryptocurrency transactions, not necessarily ICOs, but private sales of various sophistication. But in terms of ICO itself, the ones that we've seen, yes, there's the high net worth individuals, but in terms of large professional financial institutions, I would say that there's not.
I mean, from our perspective, I think that there's about 260 specialist crypto funds at the moment. I mean, we're seeing more and more activity engaging on the exchange from institutional investors, but they're not the large kind of billion-dollar firms. These are small and mid-cap firms. Now, the question of why I don't know, I don't see them, to be honest, really participating in pre-sales or in the kind of the public sales. But is that a regulatory issue? Is it a problem with the ICO, or is it a liquidity issue? Is that they're really comfortable with the depth of the market in Bitcoin, in Ethereum? They're not particularly even really participating in altcoins. What do you think?
I mean, I don't think it's necessarily a regulatory issue. I think it's just, as you said, there's other factors that are involved rather than any kind of regulatory regime that's preventing big institutions from participating.
Potentially even risk management tools, such as futures options and things like that on the same kind of asset class as well, is challenged, right?
Yeah.
A challenge for them. So it makes sense.
A recent research report by Ernst & Young recently reported that more than 10% of the US $3.7 billion in ICO funds raised are lost or stolen in hacker attacks. This of course is an area of large concern. What David, what areas of compliance can an investor should an investor watch out for? What questions should he ask about security before he enters into that? And maybe Jay, is there any particular remedy and legal remedy recourse for hacks? There have been a lot in the market. How have they been settled, and what's been the outcome?
I'll let David go first.
Sure, I could start that and then pass on the legal aspect of it to Jay. But normally, it's more of looking at the cybersecurity of the platforms. It's making sure that you're doing, it's not just the basic one part of a compliance program. It's an overall holistic approach. Everything from, just your KYC, which wouldn't protect you per se to an extent, but just making sure that you're having the right, who even the companies or the tokens that are putting on the exchange are, or individuals who are trading on it, to making sure the cybersecurity and the security process you have, that I think would be key. Legal aspect of it, I don't know. I'm going to pass that over to Jay.
I don't believe there has been any litigation, at least any that's been resolved from arising from all these hacks. So I'm not sure what the case law is. It's unsettled at this point. In terms of what kind of claim, if you're on an exchange and it's hacked and you've lost the money, it would be based on, again, the terms and conditions of that exchange, unless you can prove that they were negligent in protecting your interests. It'd probably be difficult. I'm sure Brad's terms and conditions are tight towards them.
Everyone looks at the exchange. Okay, the elephant in the room, for an exchange, a hack is crippling. The challenge you have is obviously it will, impact your business significantly moving forwards. The big question I have around kind of this EY research is basically 10% of everything that's being raised in ICOs is potentially either from stolen hacks and things like that. So how can an institution even get involved with an ICO with the potential that it's actually its sources of funds are from criminal activities?
Yeah, but you're assuming that those exchanges, the institutions are taking money, or
no. So basically, the ICO is they're raising money from their pre-sale audience, their community, and people are pledging the money. But a lot of that could be from hacks. It's got dubious provenance, right? And this is part of the challenges with KYC, AML around crypto is we know how to do this on the fiat side really, really well. And the reason we focus on this part is, yes, money laundering is bad, terrorism financing is super bad, but the biggest problem is also, not the biggest problem, the next problem is also bank accounts, and we have to comply with the banking standards, and the banks want to make sure they know sources of funds. Now, when it comes to an ICO, people are pledging Ether, or they could be potentially pledging fiat, but they're pledging Bitcoin or Ether or whatever. And there's not necessarily, on most exchanges, the same kind of scrutiny on where this actual crypto came from. So the project that you're potentially engaging with as an institutional investor could have actually received funds that is of dubious source. That's true.
But then I wonder, so in a different context, if I'm selling, again, it depends. So that's why I say, I agreed with David earlier. It depends, regulation isn't bad. So right now, if under the current regime, at least in Hong Kong and Singapore, we're just selling virtual commodities for most of these ICOs. So if I'm selling you a pen, is it my obligation to find out where you got the money to buy that pen, right?
Well, if you had a reasonable assumption that 1 in 10 pens came from a dubious source, you might have some obligation, right?
It's all degrees, right?
Yeah, I guess, yet again, I could have this wrong, and please correct me if you guys have a different viewpoint, but it's a risk-based assessment.
It is.
And if you're very comfortable with that risk, and you've looked and you've spoken to the project and you understand their processes, it's potentially even being certified. We're more and more looking down the compliance of understanding sources of funds on the crypto side and the provenance. I guess, David, do you guys do anything? Have you seen any compliance or tools around kind of crypto transactions?
Yes, that's what you just mentioned, Brad, is the challenge I think we're all facing in the space, not just from a risk perspective. Is once you start having source of funds come in from other cryptocurrency, how do you track to the source? We don't have a silver bullet for that yet. I do know there are some firms, I don't know the name off the top of my head, I have seen some who, as long as it's a public blockchain, like Bitcoin, they can trace that, all the way back, I think, to the original source. I could be wrong, but so then that way where it's been, who's had it, or which identities had it, but that's something we have not been able to crack, of looking at the compliance, looking at source of funds from when it's crypto to crypto. If you do know, you can let me know. That'll be great. And for the listeners, I'm sure that is a great service, like a value add service.
It sounds like from a legal and compliance viewpoint, we're very much in the undiscovered country. And but the point.
Yeah,
the
let's
point
call it the gray area.
Yeah, when I've spoken to programmers and developers in crypto, especially people from the early days, the struggle is that there's one side that wants to institutionalize and broaden its financial appeal, which requires disclosure, transparency, and regulation. But it's very easy for all these people, including lawyers, to forget the reason it was developed was because people wanted complete decentralization. You see, what happened in the digital world was that computers and the internet was supposed to be what crypto was today, an open and free place for you to wander. But now it's being dominated by the evolution of capitalism, which is Google, Facebook, Amazon. They've become the centers of information clearing and repository. Crypto blockchain represents a complete break from that. And I think one problem is that while certain institutions and groups want to rush towards institutionalization, there is an inherent contradiction.
Yeah, I mean, I think
I agree. I agree with that. But I think it's also finding that right balance as you evolve. Internet, great platform. Social media is a great platform, but unfortunately, in this day and age, outside of the Googles or the institutions that hold information, there are a lot of terrorists. There are a lot of crime that is committed on there because it's a great platform to conduct crime. So in that sense, you have to have that balance of letting innovation grow, not hindering it or locking it down, but finding, and it's hard. That's why it's a gray area. That's why everybody, including governments, regulators, entrepreneurs, as you call them, institutions, financial institutions, everybody is exploring that fine balance, because you need to find that balance as you evolve. It has to have that, both of oversight in order to protect the space, as well as to allow it then to thrive. But that's just my view.
Yeah, absolutely. I would agree with that. And I mean, blockchain, cryptocurrencies, ultimately at the end of the day, it's a tool, right? And I think a lot of the enthusiasts have a very idealistic vision of what it could be. On the flip side, as with any tool, it has multiple uses. So the point of regulation is to protect some of the excesses of what it could be. I mean, you're looking at in Korea during the crypto craze of earlier this year, that you're having 80-year-old grandmothers put in their life savings buying altcoins that they can begin to explain what it is to you, right? And it's no different from the financial derivative products during the 2008 crash, right? So it's about giving transparency and understanding and protecting the investor and not just regulation for the sake of regulation. It's funny, I was in California earlier this year and giving a talk, and there was a talk with some Morgan Stanley and Goldman Sachs bankers. And so the crowd was a mix of very, very enthusiasts, I would say, crypto enthusiasts, one of which had Ethereum etched into his hair.
Classy.
Very classy. I think he didn't plan it quite well, because towards one side got really jumbled. So I think he ran out of room.
Volatile markets.
But he went on a big rant about how the banks are trying to kill cryptocurrency, blockchain, and how Bitcoin and Ethereum are going to make a huge impact on the bank's business, and that's why they're so scared of it. But I thought Morgan Stanley, the VP that fielded that question, had a great answer and said, you guys are very idealistic. We're a bank. we'll make money from this, regardless if it's Bitcoin and ICO. It doesn't really impact our business as much as you think it does.
So it's an interesting point. I mean, I totally agree there, but I mean, this is where we're also seeing the evolution of the market, right? It's revolutionary technology in one way, but the markets themselves are evolving, and you're seeing a fragmentation. You're having mainstream kind of exchanges, and they're providing a lot of scrutiny on the ICOs that they're listing, and they're really trying their best efforts, and they're trying to be transparent in what they're doing. And then you have decentralized exchanges.
Yep.
And you're finding those early adopters that really wanted to be independent and hide what they're doing, be anonymous. They're moving away from those original centralized exchanges across to the decentralized. And so you're essentially going to see an evolution of these centralized exchanges. And this is where it goes mainstream, and you'll find, hopefully over time, more and more participation from the institutional investors as they get more and more comfortable with these structures, but also this approach of best efforts. There are no regulators kind of overseeing us, but we do as much as we can, and we hold ourselves to the highest possible standard that we can at this point. We just make people understand our business models and how we do things.
It's interesting. It's interesting how ICOs are the natural evolution of cryptocurrency, because as you have a store of value and a basis of transaction, forming a capital market is a natural migration, just as the money changers existed during the Roman and Greek days to exchange whatever was the store of value in those times, copper coins and gold. The banks, as a former banker myself and someone who's worked in an NGO, with central banking activities and talking to bankers, which they cannot fulfill in the short term. Very dangerous. No government in history has survived with a parallel currency underneath. So to get back to the issue of what is the conflict is that, and the inherent conflict in ICOs is that, and opening bank accounts is that you're not allowed anonymity. That's why the Chinese government explored government crypto, their own government crypto. Banks have explored their own bank crypto, and from what I hear from the underground, its failure is that it won't allow anonymity. You can't have an anonymous bank account these days. You could in the past, right? Have offshore Panama, Cayman Islands holding bearer share certificates, all sorts of dodgy things to hide who you are. You can't anymore. That's a fact. Anybody who tells you otherwise doesn't understand law and compliance in its current form. And the whole idea of crypto was anonymity. The moment a bank starts to offer its own crypto just to make sure it holds customers, it can't be anonymous crypto. And government crypto, why would they issue an anonymous crypto? It undermines government regulation and central banking operation. This conflict is unresolvable. And when people ask me, what's it like? I would say, and I've written in my columns, it's like the Reformation or the schism for the Western Catholic Church during the Holy Roman Empire. But suddenly a group said, we don't accept your version of this religion, that is finance, central banking, how you see the financial system operating. We're going to break. And just as a schism broke because they had their own version of the Bible, here, technology and democratized technology, the availability of high-powered computing for everybody, has allowed cryptocurrency, blockchain, to actually break off. And herein lies the problem of everything springing forth. ICOs, which, as you said during a conference, a Morgan Stanley banker said they're going to make money from it. They're pretty confident that they won't be collapsed by it. Well, we just have to go. We don't have to go back to the Reformation. We can go back to the early 90s and the internet.
it was condescended upon by almost every institution. It was never taken that seriously until the technology developed to a point where all banks are actually internet companies now.
Yeah, but I guess, I mean, that's the point, right? And, you know, and what the tool actually allows. So, for example, I mean, in the UK now, I mean, Brad may know this more, but my understanding is all exchanges that are based in the UK needs to report to the use of account holders, right? So,
I mean, that's not exclusive to the UK. I mean, you look at CRS and things like that. I mean, not reporting this, for example, from the US perspective, correct me if I'm wrong, would be kind of tax evasion or money laundering, essentially, right? So, I mean, yet in Hong Kong, we're lucky. We're on this model 2, which it is kind of, we have to get the consent of the individual before we can share the information, but we are required to be registered with the IRS and to share information through FATCA.
Yeah. So, I mean, you know, that itself, it's, you know, governments are regulated. It doesn't mean it's going to die. It doesn't mean the government's going to die. It's not, you know, it doesn't mean either or.
No, it's you know, you're correct that if you use a Bitcoin, a crypto exchange, you know, you're not anonymous. But once you're into crypto, you can trade yourself, and you are anonymous.
Sure.
But that's why the U.S. Federal prosecutors call crypto exchanges criminal ledgers, because it's very easy for them to catch criminals. They just go to the exchange. That's what one prosecutor told me, and get the records.
Just like any bank, right?
Yeah, it's just like any bank. So
it's the control point.
Well, but they should have comfort in that process. I mean, to clarify, it comes down to the actual platform that you're using, right? So, I mean, not everyone is maintaining that it's actually totally anonymous as well. I mean, we can tie individuals to wallets along the way. I mean, and this is where institutions, when they want to get involved with this, they'll be comfortable with their counterparties that they're working with, that they're holding themselves to the same standards on a lot of the requirements that they need to. They won't randomly just select some decentralized exchange.
Yeah, no, absolutely. I mean, I think inherently there's also, you know, it's an interesting point. I'm not sure if everyone is aware of GDPR in the EU. And, you know, one of the things about GDPR, a fundamental point is the right to be provided. Right?
Well, that's in direct conflict with AML KYC, right? I mean, especially from a Hong Kong perspective, we need to maintain the data for 6 years after the business relationship's terminated.
Exactly. And even more fundamentally to a larger blockchain, the whole point of blockchain is that it can't be, you know, it's immutable, right? And so how does the right to be provided interact with this? And I think as the industry, as a technology, as the industry, and the regulations around it evolve, you know, these things will be clear. I think the pace of the technology is phenomenal. I mean, a year ago, we wouldn't be having this conversation, right? Or a year and a half ago. And GDPR was thought, you know, the initial drafting, you know, has been an almost decade-long process. And, it's kind of ironic that the moment that it's come out, it's already off. That law is more, you know, some parts of it is obsolete.
So I have just targeted 2 kind of key questions, especially from an ICO perspective, that I'm really concerned about. One is kind of valuations and the way firms are doing this.
Yeah.
I mean, from my understanding, and I could have this wrong, but prices are not driven by traditional techniques such as BCFs or comps. It's from fear of missing out, and it's sales tricks, right? Yeah. About caps and airdrops and discounts and things like that. I mean, what do you think, Jed?
No, I agree. I mean, it's hard to evaluate ICO, right? I mean,
why? I mean, you potentially, if you have the forecast for the next 3 to 5 years, I mean, you have potential revenue, right? I mean, it'd be like any seed or growth investment for a VC firm, wouldn't it?
I mean, we work with a lot of startups and VC firms, and you know, they'll tell you if you're a red hot startup in the valley, you'll get maybe a 10 million valuation, and everybody wants a piece of you. In Hong Kong, if you're a good startup at the seed round, you're looking at valuations of maybe 5 million, right? An ICO easily, relatively successful ICO will blow that out of the water. right?
I mean, Brave raised 35 million in 30 seconds, total raising of 1.6 billion dollars.
Exactly.
I mean, it's insane. I'm concerned. How do they justify this?
How does the issuer justify it, or
Yeah.
how does the market justify it?
Or either.
I mean, I guess how the market justifies it. It's speculation, right?
Yep.
I mean, that's the ultimate. I don't think some of the technologies you see in the business in the VC stage are very, very good. But they're managing 10 million from venture capital investors. So I guess the only way I can rationalize it is that a venture capital investor will do much more due diligence versus you're getting $1 from a much wider pool.
Well, Jay, that's a good point you're making, that in Hong Kong, venture capital rounds are actually lower valuation than Silicon Valley. As you said, 5 million for a first round as opposed to 10 million for a first round. And a lot of that is driven by a number of factors, just supply demand. Although you have more experienced VCs in Silicon Valley, you have more VCs.
Exactly.
So there's going to be an upward pressure on a bidding process. ICO actually may not help Hong Kong's, Asia's venture capital market, because it provides yet another alternative forum where why wouldn't you, as a startup, take the more valuable route, right?
Yeah.
Yep, agree with that. And also, wouldn't you think I always think fundamentally a factor we can't forget of what drives the valuation of ICOs is the speculative nature, speculation. It's that, promise of potentially having 1,000% higher returns. It's the nature of speculation.
So, I mean, I hear the argument of why the valuations in Hong Kong might not be attractive, but let's go back to the fact that these tokens are utility, they're revenue, right? From a tax base, from a regulatory kind of base and things like that, Hong Kong also seems ideal. I mean, look at the trust industry that we have here and things like that. I mean, I could imagine lots of firms would love to declare their profit tax and stuff like that in Hong Kong.
I think lots of firms would rather have it.
I agree, but if there was a choosing jurisdiction to do it.
Yeah, that's certainly a very attractive one. I think Hong Kong will give you that's why we see a lot of increased activity in Hong Kong, is because it's easy to do business. It's a low tax base. You need to recognize this as revenue. So if you plan ahead enough, then you should be able to have a very tax efficient structure.
So, I mean, yet again, it's really interesting when you look at the actual volumes of ICO deals last year. I mean, you have seen that there's a couple of interesting trends. First of all, they cleared about $4 billion last year in ICO fundraising. This year to date, 2018, it's already above $6 billion, 6.3, I think. But the challenge you're seeing is, in terms of pledges, the pledges are actually down. So they're 25% of where they were year on year, from June last year to June 2018. Projects are finding it harder and harder to raise money. I mean, what are your thoughts on that? Is that because of people are a bit more wary on the valuations, they understand how to do due diligence, or the quality of projects are more dubious?
My personal opinion is that the hype has gone down a little bit, and that's why. For most of the ICOs, I don't understand why it's valued at that and how you can generate it, other than it's just speculation. Right? I don't think most people who are participating in ICOs even bother to read the white paper. Well, I think that's a fair comment. Whereas if you are, if you are a venture capital, if you're doing a venture capital round, then you do a fair amount of due diligence before you invest.
But you also see that exuberant valuation in the non-ICO, that is the venture capital market outside. Look at all the Chinese companies that are receiving billions.
No, absolutely.
Based on multi-billion valuations.
Absolutely.
You never read about what is the valuation method, what's the justification. If you're selling some big dream over the hill, and if you want it, that's the price.
No, absolutely. I mean, and that's hype and marketing, right? So why does Xiaomi get a 10 billion, something like that valuation, and the China Telecom power infrastructure company, sorry, I forget the name off the top of my head, which is a complete monopoly, doesn't even get half of Xiaomi's valuation, right? And it's hype and marketing. It's
supply and demand.
Flavor of the day.
Yeah, flavor of the day. And if you want in, this is the price. It's not a academic analytical session. It's a straight up bargaining.
So at least the way I see the ICO market at the moment, it seems comparable to third boards and gems and kind of that penny stock market at the moment. Do you think there's, I mean, does anyone think there's an opportunity for larger cap corporations to get involved in ICOs to start tokenizing some of their assets?
That I'm not sure. I don't know if you guys
have. I see. As soon as we can resolve the legitimacy compliance of ICOs, the next step will be tokenizing other asset classes. I can see, if you can indulge me in my imagination, if the formalized stock exchanges or futures exchanges were ambitious, they would get into not only futures but crypto, and squeeze out the multitude of crypto exchanges, because there's just too many. Yeah. The ultimate, the evolution of that is that you centralize exchanges, right? Of course, the revenge from crypto exchanges to fire back would be they would get into the tokenization of listed equities and allow them to be traded at even a lower fraction of what a fraction they're traded as now, right? So what you have here is, like I said, a schism, just a complete break. That technology allows this kind of revolution and warfare to go on.
Yeah, from our discussions today, it's I think one thing to point out is ultimately we talk about cryptocurrencies and ICOs in isolation. And fundamentally, they should be attached to a business and a blockchain technology. That's hopefully there's an intrinsic connection as the coin goes up, because the technology business underneath it is doing well, right? And not just.
I agree, but if you look at some of the projects last year, I mean, I wouldn't necessarily those projects would have actually been in line with that comment.
No, absolutely, and I think that's
so you raise an interesting point. I mean, you've worked on a number of projects, I think. I mean, how do you, as a lawyer that's maybe used to dealing with white papers or business plans or prospectuses, also then go and vet the underlying technology, the actual smart contracts?
Well, we don't vet the underlying technology.
So then, how can you work with a project if someone's not the technology but the smart contract bit?
The smart contract bit. So we generally haven't got to that point. So if there's a blockchain company that is doing a ICO or tokenization, we would do first the ICO, the opinions for the ICO, and then also we try to move on to the actual business. So we treat it as any other technology company, right? So doing your terms and conditions, doing your merchant agreements, your supply agreements, whatever those commercial agreements that you need, doing your corporate structuring for you, treating it as a business. We haven't gotten into quite writing the smart contracts.
So one of the challenges that we're seeing with the smart contracts right now is, it could be the bugs or it could be by intention, but money can get tracked or it can be diverted based on all of the rules and logic that no one really disclosed. I mean, as I mentioned before, one of the examples, we saw a white paper that had 18 lines of code, but when we looked at the underlying smart contract, there were 489 lines of code, and basically overwrote all of the things that were actually in terms and conditions and things like that. So when we get looking at due diligence, at least on these types of projects, I really think that there is a knowledge gap at the moment, and over time we need to start looking at different aspects in comparison to what we normally would with a normal kind of startup.
Yeah, absolutely. I think in terms of the legal industry going forward, smart contracts will definitely come into play, and then there'll be a need to review the actual uncoding of the smart contract. But right now, that's not, I certainly couldn't review the code. So it's not, it needs time for the industry to develop and catch up.
Great. Well, thank you very much, gentlemen, and I hope everybody found the discussion and debate to be useful and interesting and state-of-the-art. Thank you for listening, and we'll see you again.
Thank you.
Thank you.
Thank you very much.